Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into company filings and see what is really going on behind the carefully crafted press releases. Today we're dissecting a report from Springview Holdings Ltd. And let's just say it is not exactly bursting with exciting news, more like a quiet look at their books and what they've been up to. Stick around, because sometimes the most interesting stories are told in the silence before we start making sense of this filing. If you're all about uncovering the real story behind the companies you invest in or are just plain curious about, make sure you're subscribed. And for those of you who love to connect and discuss these insights, we have a burgeoning community over on Discord with a link right there in the description below. So, Springview Holdings Ltd is putting out their report for September 2025. This is a big annual report. It is more of an update. Think of it like a quarterly check up, but for a 6-month period ending in June of 2025. They're retelling us their financial results for that period and talking about some recent events. Essentially, they're re-giving us a peek under the hood during this time. They're retelling us that they're re-giving us their unaudited financial results for the first half of 2025, and they're also going to talk about some recent company happenings. What is attached to this report are a few key pieces of information. First, there is the Management S discussion and analysis. This is basically the company S management explaining in their own words how they think the company performed financially. They're going to compare the 6 months ending the 30th of June 2025 to the same period in 2024. Then we get the actual unaudited interim condensed consolidated financial statements and their notes. These are the raw numbers, the balance sheet, income statement, and cash flow details. But remember, they are unaudited, meaning they haven't been given the final stamp of approval from an independent auditor yet. And finally, there is an interactive data file, which is a bit of technical stuff for digitally analyzing the information. Now, before we get too excited about what they might be saying, we have to pay attention to this very important section. It is called the Cautionary Statement Regarding Forward-Looking Statements. This is a legal disclaimer telling us that a lot of what they're going to discuss might be about the future. They use words like may, will, expects, anticipates, and future. This means they're making predictions or stating their intentions. The crucial thing to understand here is that these are just their beliefs and expectations. Things could happen that are completely different. They're warning everyone that actual results could be much different from these future predictions. They're saying that the real-world impacts of various factors on their business are hard to measure accurately, and the information they base their strategies on might not always be perfect. So, when you read anything about what they plan to do or what they expect to happen, remember it is not a guarantee. They're basically saying, we hope this happens, but don't hold us to it if it doesn't. Now, for the really important part, the signatures, this confirms who is signing off on this report. Here we have Juo Wang signing on behalf of Springview Holdings, Ltd as the Chief Executive Officer, dated the 26th of September 2025. This tells us the leadership is aware of and responsible for the information being presented here. Let S dive into the exhibits which contain the actual meat of the report. Exhibit 99.1 is the Management S discussion and analysis. This is where the company S leadership provides context and their perspective on the financial results. They usually go over the key drivers of performance, any significant changes, and explain what happened during the period. Then we have Exhibit 99.2, the unaudited interim condensed consolidated financial statements. This is where the numbers live. This document will show us their assets, liabilities, revenue, expenses, and how much profit or loss they made. It is crucial to analyze these statements to understand the company S financial health. The other exhibits are related to interactive data files, which are more for computational analysis. So, in the management's discussion and analysis, we need to look for the story behind the numbers. They'll likely be explaining why revenue went up or down, what caused their costs to change, and if they made more or less profit compared to the previous year. For example, if revenue dropped, they might blame it on economic conditions, increased competition, or a decline in demand for their products or services. Conversely, if revenue increased, they might attribute it to successful marketing campaigns, new product launches, or expansion into new markets. They'll also discuss their financial condition, which means looking at their cash flow, debt levels, and overall liquidity. Are they generating enough cash to operate smoothly? Are they taking on too much debt? These are the types of insights we look for here. Now, let S move to the financial statements themselves. Since this is an interim report, expect to see condensed versions of the main financial statements. We'll be looking at the income statement to see their top line, which is revenue. How much money did they bring in? Then we'll see their cost of goods sold and operating expenses. Subtracting these from revenue gives us their operating income or loss. We also check the net income, the bottom line profit. Comparing these numbers to the same period last year, June 2024, is key. A significant drop in revenue or profit, for instance, could mean they losing market share or facing tough economic headwinds. A rise, on the other hand, could signal growth and success. It is important to note that these are unaudited. This doesn't necessarily mean there is anything wrong, but it does mean that an independent auditor hasn't verified these figures yet. They are the company's own reported numbers at this stage. Let's say, for example, their revenue for the 6 months ended the 30th of June 2025 was $100 million, and for the same period in 2024 it was $80 million. That is a 25% increase, which is quite strong. It means they're reselling more, or their prices have gone up, or both. But we need to see what is happening to their costs. If their expenses also grew by 30%, then that revenue increase might not translate into as much extra profit as we expect. We also look at their balance sheet. This shows us what the company owns and what it owes. For instance, if their liabilities have increased significantly while their assets haven't grown at the same pace, it could indicate they're taking on too much debt, or their assets aren't performing well. The cash flow statement is equally vital. It shows us how much cash the company is generating from its operations, investing activities, and financing activities. Positive operating cash flow is crucial for long-term sustainability. Now, looking at these results more broadly, Springview Holdings Ltd's financial performance for this period will tell us a lot about its current health and future prospects. If the numbers show consistent growth and strong profitability, that is generally a good sign. If they show declining revenues or increasing losses, it raises concerns about the company's direction and ability to compete. We need to see if the company's strategy, as outlined by management, is actually translating into good financial results. For example, if they've been talking about expanding into new markets, we expect to see revenue growth that reflects that expansion. If they said they were cutting costs, we want to see expenses going down. The disconnect between what is said and what the numbers show can be very telling. My take on Springview Holdings Ltd based on this type of filing is that they are in a phase of reporting their financial status and operational updates. The key is to scrutinize the financial statements and management's commentary to understand if their business is truly growing or just treading water. We need to see if their revenue is expanding meaningfully and if their profits are keeping pace, or ideally growing faster. A major risk I'd be watching for is if their expenses are growing faster than their revenue, which would eat into their profitability. Conversely, an opportunity could be if they're showing strong cash generation despite current market challenges. Ultimately, Springview Holdings Ltd appears to be navigating its current operational period, and the true story lies in the detailed financial performance, and whether management's narrative aligns with the hard numbers presented. Alright, that is our breakdown of Springview Holdings Ltd's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.